In our spotlight today, a new report shows that the U.S. economy grew by 4.3% in the last quarter. That's according to the estimate released by the Bureau of Economic Analysis, and it's a far higher than what economists had expected. President Trump is celebrating, posting to social media saying a nation can never be economically great if eggheads are allowed to do everything within their power to destroy the upward slope. So for more on all this, I want to bring in RSM's U.S.'s chief economist, Joe Brusuelas. Joe, thank you for the time. But first off, I got to ask you, in context-wise, how big of a surprise was this analysis?
Well, it was a little bit of a surprise, basically, because of the volatility within the trade component. We got a much bigger swing to the upside on growth because the way GDP math works is that you look at net exports, imports fell at a pretty sharp rate, and exports actually increased a little bit stronger. Now, economists like myself, right now, because of the volatility around trade and inventories, we look at something called real final private demand. Now, that's been up basically 3% for the past 2 quarters. It was up 3% again in this quarter. And so regardless of those volatile swings, we've got some real robust growth here. And that's a very good thing. And we don't want to sell that short at this point.
Sure. What do you think's behind this surge?
Well, what I think is behind the surge is 2 things. One is very strong spending by the upper income households, the upper 2 quintile of households. So about 40% of all U.S. households are responsible for about 66% of all spending. And then we've seen, just a historic level of investment around AI data centers that really drove, 5.4% increases on the quarter in equipment and intellectual property. While those slowed from the previous quarter, those are still extraordinarily strong. So we really do see something unique going on here. However, it's very odd that we're getting this such strong growth, yet during the 3 months of the third quarter, we only saw job creation increase by an average of 51,000. And between July and November, we've seen an average of 23,000. So what I think is going on is that we're going to see very strong economy, but anemic job growth, and you may be seeing a decoupling between job growth and the economy, and that's going to be very difficult to explain to the American public.
Well, and the other thing that I was curious about with this is, so the GDP reading, it stemmed in part from a rise in exports and a drop-off in imports. That's something that you alluded to earlier. The administration would say that this is a sign that President Trump's tariffs are working out. But I'm curious, is that also your opinion, or is the jury still out here?
The jury's still out. It's causing a lot of top line of volatility, which is why I brought up that real final private demand point. Look, we can see in isolated areas like demand for durable goods is very weak at 1.6. Why? Well, we import a lot of durable goods, and those have a fairly stiff tax on them. Therefore, its demand's gone down. Second, if you think that those tariffs are reviving the manufacturing industry, I would really suggest everybody go take a look at manufacturing employment. It's been trending downward for quite a bit of time this year. So I'm absolutely certain the jury's still out. And when you get in these sort of trade conflicts and you put tariffs on a wide range of goods, it takes about 2 years to really come to a real conclusion on what's happening. We're only about 8 months in, so we got a long ways to go on that.
Okay. Joe Brusuelas, thank you so much for the time.
Thank you.